Welcome to the Deep Dive. We're here to pull out the core insights from key source material for you. And today, we're diving deep into the Indianapolis real estate scene. It's late 2025, and things are definitely changing. Our goal here is to give you that strategic edge, really focusing on why going off-market might be the smartest move for buyers right now.
Yeah, the landscape in Indy has shifted, no doubt about it. The sources are pretty clear. We're not in that crazy seller's market anymore. It's edging towards balance, as they say.
Balance meaning homes are sitting longer.
Exactly. That frantic pace is gone. Homes are lingering on the MLS. That's the main public listing service for about, 47 days on average now?
Wow, 47 days. That's a big change.
Huge. And inventory, it's swelled. We're talking 17 to 21% more homes listed compared to last year.
So more choice for buyers.
Definitely. It works out to about a 2.5-month supply of homes. And prices, well, they're stable-ish. The median's around $251,000. That's only up about 3.2% from last year. Very modest growth.
So the frenzy's over. Sellers might be getting a bit nervous.
That's the crux of it. This slowdown puts sellers in a tougher spot. They're facing price cuts. Reductions are actually at an 8-year high right now, so the power is shifting back towards buyers.
If they can play it smart.
Right. If they can offer certainty and speed. And that's where skipping the public market, going off-market, becomes less of a luxury and more of a core strategy. It offers exclusivity, potential savings.
Okay, so we're digging into the playbook of a specific indie realtor who really specializes in this. Covers areas like Avon, Carmel, Fishers, Zionsville, Indy proper. And the goal is to really break down how this off-market approach works in practice, especially now in Q4 2025, why it's about speed and savings, not just finding hidden gems. All right, let's define our terms. Off-market, it sounds a bit cloak and dagger. What exactly are we talking about here? Pocket listings?
Yeah. Off-market basically means the property isn't advertised on the main MLS. It bypasses that public exposure. And yes, pocket listings are one type. That's where an agent has the listing agreement, but intentionally keeps it private. Shares it only with a select network of buyers or other agents.
Okay.
But it also includes properties found through direct outreach to homeowners, maybe referrals from attorneys, bankers, people who know someone wanting a quiet sale.
So why would a seller do this? Especially if, as the sources suggest, they might get 5, even 15% below market value.
Okay.
On that $251,000 median home, that's a lot. $12,500 to nearly $40,000 left on the table.
Well, see, that's the common misconception, that they're just losing money. It's more of a strategic trade-off. Think about a standard MLS listing. You've got, 5 or 6% commission, right?
Right.
Plus staging costs, maybe painting, keeping utilities on for those 47 days on average, paying the mortgage.
It adds up.
It really does. So when a seller takes, say, an 8% discount for a quick, guaranteed, often cash-backed off-market close, they might actually end up financially pretty close to where they would have been after all those MLS costs and hassles.
Oh, okay, so they're trading potential top dollar for certainty and convenience. No staging, no endless open houses, no 47-day wait.
Exactly. They skip the public scrutiny, avoid the stigma of price reductions if it sits too long. For many sellers in this slower market, that peace of mind is worth a lot.
That reframes the buyer's savings then. It's not just luck, it's baked into the seller's strategic choice. So those numbers, $12,500 to $37,500 potential savings on a median home, are real.
Absolutely. And contrast that with the public market. Right now, MLS listings are actually selling for slightly over asking price, on average 100.19% sale to list. So off-market is where the real discounts are potentially found.
Plus less competition, I assume.
Way less. On the MLS, in a good area, you could still face 5, maybe 10 competing offers, even now. Off-market, you might be the only buyer, or maybe 1 or 2 others. Your negotiation power is significantly stronger.
And faster closing times.
Generally, yes. Around 30 to 45 days is typical compared to that 47-day average listing time on the MLS, plus closing time after that.
Okay, it sounds great, but what about the risks? How do you even know what a fair price is without public comparable sales, the comps? And what about inspections?
That's the crucial part. You absolutely need the right expert guiding you. You can't just wing it. For valuations, since public comps are scarce or non-existent, experienced agents use private databases and increasingly sophisticated tools like AI-driven comps.
AI comps.
Yeah, they use algorithms, predictive analytics, deep neighborhood data stuff that goes beyond just looking at recent public sales. It gives a much sharper real-time valuation. And for diligence, yes, the windows might be tighter, but a good agent coordinates everything, especially indie-specific checks like, radon testing, which is important here with our varied soil types.
And might you have to offer something extra to the seller, like cover some closing costs to sweeten the deal?
Sometimes, yeah, maybe a 1 or 2% sweetener, as you call it. But think about it if you've already negotiated a 5, 10, or 15% discount up front.
That extra 1–2% is easily worth it.
Exactly. It pales in comparison to the overall savings.
So we've got this backdrop, high inventory, nearly 7,000 active listings. That 21.3% jump, meaning sellers are maybe a bit more willing to deal privately. Where in Indianapolis should listeners be focusing their off-market hunt? Does it vary by neighborhood?
Absolutely. The why behind a seller choosing off-market often depends heavily on the location and the type of property. That's key to finding the opportunity.
Okay, let's talk specifics. What about those beautiful historic areas like Meridian Kessler? High price point there.
Right, Meridian Kessler. You're looking at $400,000 and up, typically. It's held its value well, partly thanks to remote workers liking that historic term. Off-market here is often driven by a need for discretion. Think high-value estate sales where the family wants to avoid a public probate spectacle.
Ah, interesting.
Or maybe it's someone who's owned the home for decades and just refuses to deal with staging or public showings. Pre-market whispers in this area can be pure gold for the right buyer.
Makes sense. Okay, moving closer to the urban buzzbroad ripple, what's the angle there?
Broad ripple, maybe 250K to 350K range, is a real hotspot for investors right now. Rental growth is steady, around 3 to 4%. So the off-market play here often involves multi-unit properties.
Why off-market for those?
Sellers, often the landlords themselves, might want to sell quickly and quietly to another investor, bypassing property managers or avoiding alerting tenants prematurely. It's about finding those whisper deals on duplexes or small apartment buildings before they hit any investment syndication lists.
Got it. What about buyers looking for that upscale suburban life? Carmel or Zionsville? We're talking $600 K plus there.
Easily, yeah, $600,000 and way up. The key driver for off-market in Carmel and Zionsville is often executive relocations. Think about a high-level executive needing a fast, confidential move. They cannot have their home sale become neighborhood gossip or sit on the market publicly.
So they prioritize speed and privacy above squeezing every last dollar.
Precisely. An off-market deal facilitated by someone with the right connections, maybe through corporate relocation networks or wealth managers, is the ideal solution for them.
Okay, and finally, what about areas seeing more transformation, like Fletcher Place or parts of the Eastside, the fixer-upper zones?
Yeah, those emerging areas, maybe around the $200,000 mark for properties needing work. Here, off-market is often about snagging deals fueled by gentrification. Investors look for motivated sellers, maybe absentee owners, inherited properties who want a quick as-is-sale before the neighborhood's rising value becomes fully public knowledge via MLS listings.
So you could potentially get in with a 10–15% discount before the flip.
That's the goal for investors there, yes. And don't forget, an area like Ravenswood, it's sort of a rising star. Average price is around $300. The expert whose methodology we're looking at actually closed an off-market deal there this year, 2025. It proves these opportunities exist even as areas gain popularity.
Good example. It shows it's happening across different price points and neighborhood types. So knowing where to look is one thing, but how do you actually execute these private deals successfully? We're drawing on the source material, detailing the approach of an agent with deep indie experience over 20 years, certified negotiation expert, luxury specialist, over $50 million in career volume.
Right. The track record speaks for itself, and they're getting results now in this 2025 market. That Ravenswood sale you mentioned, another one on East 48th Street back in March. These are recent, relevant wins.
What's key to their system? How do they turn that market access into real savings for the buyer?
It seems to boil down to two things. First, an extensive network for sourcing the deals, knowing the other agents, the bankers, the attorneys who have these private listings or know motivated sellers. And second, using sophisticated tools and negotiation tactics to actually secure the deal on favorable terms for the buyer. It's not just finding the house, it's winning it smartly.
Can you walk us through that case study you mentioned, the exec relo triumph? How did that play out?
Sure. So this involved an executive relocating to Carmel. Tight deadline, needed to be moved in with the family in just 45 days.
High pressure.
Very. They needed speed, but they were savvy. They didn't want to overpay just because they were in a hurry, especially with the broader market slowing down. So the agent tapped into their network, specifically their banker connections, and unearthed a $1.2 million estate in Carmel that wasn't listed yet, pre-market.
Okay.
Because the agent could offer the seller that critical speed and certainty, a qualified buyer ready to go, Private transaction, they negotiated an 8% discount off the likely market value.
8% on $1.2 million. That's almost $100,000.
$96,000, exactly. A huge saving. And they closed the entire deal in just 35 days. Faster than the deadline, way faster than the public market average.
That really highlights the power of bypassing the MLS friction. What tools help make that possible beyond just networking?
Well, the valuation piece is critical. We talked about those AI comps using data analytics for sharp, defensible pricing. That helps justify the offer to both the buyer and the seller.
Right.
And then there are tools to streamline the process itself, like using high-quality virtual Matterport tours, for example.
Those 3D walkthrough.
Exactly. They allow a serious, pre-qualified buyer to really explore the property remotely, in detail, before even setting foot inside. It saves everyone time, lets the buyer make quicker decisions, and maintains that discretion the seller often wants. It speeds everything up.
Okay, so for you, the listener, if this sounds like a path you want to explore, the sources actually lay out a pretty clear roadmap, like a 6-week playbook.
Yeah, having a structured approach is vital when you're operating outside the standard MLS process. It starts week 1 with a really focused discovery call with your specialized agent. You need crystal clear specs, 4 bedrooms, under $300, broad ripple, whatever it is. And crucially, you must have your financing locked down. Full pre-approval, no serious off-market seller will engage otherwise.
Makes sense. Certainty is key. Then weeks 1 and 2 are the hunt.
Right. The agent scans their private networks, aiming to find maybe 3 to 5 solid potential fits based on your criteria. And they'll likely leverage those virtual tours, the Matterports, to help you quickly vet those options without unnecessary physical showings.
Okay, then weeks 2 and 3, you found one. Time to make an offer.
Exactly. Offer mastery time. This often involves a letter of intent, or LOI. It's a non-binding outline of the key terms. But it's not just about the price number. A skilled negotiator crafts the LOI to address the seller's specific needs or pain points.
Like what?
Maybe offering a flexible closing date if they need time to find their next place, or agreeing to cover a specific closing cost they really want to avoid. It's about finding leverage beyond just the dollar amount to secure that discount.
So using speed and certainty as bargaining chips.
Precisely. That's how you translate the seller's desire for an easy exit into that 5–15% savings for you.
And then weeks 3 through 5 are about getting the details right. Inspections, title.
Yep, the diligence dive, coordinating the title search, the home inspection, appraisal if needed, and those Indy-specific checks, radon, lead-based paint disclosures if applicable, all on a potentially tighter timeline leading up to the closing, ideally around week 6.
It sounds like a focused, efficient process if managed well. And the sources suggest this off-market approach is becoming more common.
Definitely. The numbers indicate off-market deals now make up roughly 25% of luxury transactions in Indy. That's a big jump from maybe 15% just last year.
Why the increase now?
Sellers, especially at the higher end, are actively trying to avoid those public price reductions. They'd rather offer a discreet discount privately than signal weakness on the MLS, so they're whispering deals more often.
Interesting. And there are other trends fueling this, too. Something about eco-incentives.
Yeah, that's a newer wrinkle, particularly for investors looking at fixer-uppers. Indiana has expanded some of its solar energy rebates up to $5,000 now. This is making unlisted, older homes, especially maybe on the Eastside, more attractive for rehab projects. Buyers can factor that rebate into their renovation budget, boosting potential ROI on an off-market find.
And you mentioned investors earlier, especially in places like Broad Ripple. Is that trend growing?
It is. We're seeing what the sources call investor hybrid plays. More out-of-state capital is flowing into Indy, targeting multi-unit properties in areas like Broad Ripple. They're attracted by our relative affordability and those steady 3–4% rental yields.
And they're using off-market channels.
Often, yes. They work with local connectors to find these deals quietly, rehab them, and are reportedly seeing returns in the 15–20% range post-flip.
Wow. So that means more competition for local buyers, even in the private sphere.
It does. It underscores why, if you're a local buyer serious about getting a good deal in this market, you really need to be proactive and operate strategically outside the standard MLS playground. #outro.
Okay, let's try to synthesize this. The big picture for Indianapolis in late 2025 seems clear. The public market has cooled significantly. Homes are taking longer to sell. That 47 days on market number is key, and inventory is high.
Right. which creates the perfect conditions for off-market strategies to shine.
For buyers, it's the pathway to potentially significant savings, that 5 to 15% discount, and a way to completely sidestep the competition and delays of the traditional market.
And while it might feel a bit unconventional, the process can be very secure if you have the right professional guidance. Using those private data tools for valuation, doing thorough local inspections, it mitigates the risks. And remember, any small concessions you might offer the seller for that quick, quiet deal are almost always dwarfed by the discount you negotiated up front.
And the timing, Q4, seems critical. Sellers want deals done before year-end without suffering a public price cut.
Exactly. They're more motivated than ever to listen to discreet, serious offers right now.
Which brings us to our final thought for you today, really encapsulating this whole strategy. It comes from the expert's philosophy. Indy's finest homes aren't chased. They're claimed.
And with that increasing competition, especially from savvy out-of-state investors who recognize Indy's value and stability, well, waiting for the perfect listing to pop up on the MLS might mean missing the best opportunities. Q4 is the moment to be proactive. The bulls aren't just hunting listings anymore, they're hunting deals. And right now, many of the best deals are happening off-market.